Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, June 21st. The year's 2020. Let's talk trading. It's time for weekly open and gap. And as you all should know by now, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And remember, traders, never lose more on a particular trade than you're willing to lose. In other words, manage the risk. Money management, take it while you can before the market takes it back. And brain management, don't get suckered into any of these, especially the last one. Okay, so far we've got all but one have filled. So anybody playing the weekly gap has been paid. And just so you know, we are in the opening range for the month here, the first day of the month. Here's that opening range. And you can see we're well within it. So short at 23, 123.23, long at 125.06. Even though I'm sure we would be long way before then. In fact, you might even be long right now as we crossed out of that lower wick zone from the Friday's candle. As you can see here, we had 4 down days in a row. For the month, though, we're up. For the week, we're up. And for today, so far, we're up. And the inside bar that happened 17 bars ago, you see we opened up inside there, broke out at 23.44. Already 25 pips to the good. And seems like there's plenty of inside bar trades to be had right now. And we're also inside the weekly and the monthly. So as you can see, inside bars across the board there for the pound dollar. Oh, wow. The Swiss yen, 312 pips. I wonder if that was a fat finger trade. What caused that? Nothing else is even close. Let me know if you made out like a bandit on that one. There's the pivot point. Here's the open, trading towards the pivot. So far, you've got clean sailing here. Not enough range. Not enough range. And I also had the other rat zone here for you, but still not enough range. Looking here, once again, we haven't hit the pivot. Weekly pivot for you pivot traders, 124.63. That's the target. Let's see if we hit it. We haven't hit that daily. You can see so far now we've got these 3 from before, these 3 from before, and today missed pivots. We flip over to the weekly. You can see here, there's a missed pivot down here at 23.01. And we've got a missed pivot this week. So far it looks like it's trying to go up rather than down, but let's just wait and see if we take out one or both of these pivots this week. Wick zone, as you can see, we opened outside the wick zone, went into it, came out of it a couple times, and now we're out on the other side. And price action traders. Let me do this once again so people can see these indicators. The only one that's donational is the multimeter candle color here, the one that tells you how many bars in a row you had red or green. And the one that puts the skull up is the training wheels price action right there. And that one's in the TRO 1200 or TRO build 1200 file, zip file that I sent out. I guess I misspoke. There is another donation of 2018 spread dots. And just so everybody knows, each year requires a separate donation. So If you wanted these two indicators, that would be two separate donations. So you get all of the 2017s and all of the 2018s. And those who have donated in 2020, just stay tuned. The year's not even halfway over. There's a bunch more indicators that are in beta test, and there's a couple more on the drawing board. In fact, I think I figured out how to do a smart frequency distribution indicator. And so I'm going to be, that's on the drawing board, just to let you guys know what I'm up to. And you can see here the Walmart lines. There was a trade there. Looks like it's already paid off by about, what, 3 or 4 pips. And, we talked about trading for minimum wage. And there was a trader somewhere out there on the forums. And he wrote something, I think it was on the Facebook page, something about trading for, 0.01, a micro lot. Basically a dime a pip. That's okay when you're first starting out and you want to get a few trades under your belt with some real money, get that blood flowing, that heart pumping. But, after a week or two, if you're successful, you've got to come join. You got to play with some real money. Otherwise, you're going to get, it's just not going to work the way you want it to work. I mean, if you're trading for, even $1 a pip, to some places, people work all day and don't even make $1 a day. They might make $1 a week or something. So if you're from one of those countries, I understand money's tight, but for the the rest of us, if you've got $1,000 account and you're playing for $1 a pip, yeah, you're being very conservative. But as Dragon says, divide it up. That $1,000 divided by 20, that's $50. You should be risking $50 each trade. Because do you think you're going to lose 10 times in a row? Do you really think you're that unlucky, or can't you follow the instructions, the trading rules? Don't you have the discipline? I mean, right here, just doing the Walmart trade, you can look back here. This hour, there was 3 pips. If you were trading, say, $5 a pip, that's $15. That's minimum wage. You're at least making minimum wage. If you're not at least making minimum wage every hour you trade, why trade at all? I mean, really, think about it. Why trade at all? You might as well go flip burgers. I mean, really, or maybe even wait tables. But you can even be a day laborer and make more than so. You're cheating yourself. I mean, if you don't have confidence, that's one thing. Well, success breeds confidence. So you just have to take the risk. But if you think about it, can you really lose 10 times in a row if you're following not just my method, but just about any method? If the method is any good at all, you might lose 6 out of 10. So you might be right around break even. But to lose 10 times in a row, I mean, something as simple as the price action here. Started a day. Candle started here. Green at the line, there's a winner. Candle started here. Red at the line, there's a winner. Candle started here. Red at the line, maybe a scratch trade. Maybe you held on. You could have popped out here for a profit. Same here. Green at the line, you hold on. He popped out. You had a chance to make 20 pips. Okay, here, green at the line, another 4. What can I say? You've got to get in the game. You just got to get serious about it. I mean, because if you're trading a dime a pip, most people, you're not going to really care. It's like, yeah, I know because I've done it before. You know, I have to trade at a, where if I lose, I feel it. So, because here's the other thing. It goes up 3 pips. If you're trading a dime a pip, that's 30 cents. Really? You're going to exit that trade for 30 cents? No. $3? Maybe. $30? Now that's a little bit different. 3 times 30 is 90. That's almost $100. Now we're talking folding money, right? So if you basically, for every $1,000, you should be risking between $5 and $10, or your lot size should be $5 or $10 a pip. You got to make some real money, because it's really easy. If you're making that real money, it's really easy to see your account grow, because $50 is 5%. If you increase your account 5% each day, I mean, you could either do it at, $10, $5 a pip or $10 a pip. Either go for 10 pips like Walmart does. Think about it. 10 pips, $5 a pip, $50. $1,000 account, you increased it by 5%. So at the end of the week, you're up 25%. End of the month, you've doubled your account. Now that you've doubled your account, what can you do? Now you can double your lot size, or the amount per pip. So instead of trading for 5 and 10, you could be trading for 10 and 20. But the most important thing is, if you trade like that, you've got to have your risk management in place. If you say 10 pip stop, it's a 10 pip stop or less. If you say 5 pip stop, it's a 5 pip stop or less. And if you get up 5 pips, you don't sit there. Maybe you take it, because if the market takes it back, you're not going to be happy. Think about it. You got $50 in your hand. Somebody comes along to snatch it. I think you're not going to let them snatch it from you, are you? Well, that's what the market's just waiting to do. Snatch that money right out of your hand. So once again, you got to get serious, and the simple, breaking out, the simple breakout here. These breakouts of the previous H1, there was a nice breakout there, a tiny breakout there. There's some tiny ones here. Maybe in the beginning, you learn to take 1 pip. You get in, you get out. You do that 5 times in a row, that's 5 pips. You get in, you get out. I mean, when you think about it, price is going to have to move 3 pips or so, right around it. You got to cover your spread, so price has to move that way, and then it has to move another pip. But if you can get good at taking that 1 pip, time after time after time, then you'll probably be able to take 2 or 3, because sometimes you won't be able to take 1 pip because it pops. You could only take 2 or 3, and that's what you're looking for. You'll learn timing, you'll learn quickness, you'll learn focus if you start doing that. And that's how you become a trader. Somebody was asking me, I think once again on Facebook, where do I start? That's where you start. That's where you start. You start by trading at a level, at the horizontal line, trading with the direction price is moving at the line. No ifs, ands, or buts. No second guessing. You just do it. And then when the opportunity comes to take profit, you take the profit. And if it keeps going, it doesn't matter. There'll be another opportunity. There will always be another opportunity, unless you bust out of your account. If you bust, that's on you for not having your stops in place. So I know this was a weekly open video. I guess I kind of got off on a slight tangent there, but I'm just trying to answer questions that I've had out in the forums and emails, and really, traders, unless it's really super personal, it's so much better to put your questions out either on the Facebook group or Cresslick.com, or on the on the YouTube, on the video, because that way other people get the benefit of the Q&A. And then it doesn't fill up my inbox, because I don't want you to think I'm ignoring you, but maybe you can imagine, maybe you can't, what my inbox looks like sometimes. So if you guys could just do that, that would help. So fellow traders, that kind of wraps up this video here. I hope you are having a profitable month. I hope you have a profitable week. And just remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. Once again, if you're new to the channel, please click subscribe, click like, share the video, click the bell to be get those announcements when the next video is posted. The Rumpled One, signing out.